Hi everybody, welcome back to another video from the comfort of my own pajamas. So today we are talking about Roth IRAs and what exactly is a Roth IRA. Roth just comes from the legislative sponsor who pioneered the bill, and an IRA stands for an individual retirement account. So essentially there are two different types of retirement accounts. There's pre-tax retirement accounts, such as a 401k or a traditional IRA, and there's post-tax accounts, which you contribute with money from your take-home pay. And a Roth IRA is one of those accounts. So one of the key things to point out with a Roth IRA is that the money that you're putting in is post-tax dollars, which gives us a few benefits. So one of the benefits is the money that you put in, you can take it out for any reason that you want without any penalties. So if you put $1,000 today and you want to take out $1,000 tomorrow out of it, you're able to do so. Probably the most attractive thing to investors and to people who are trying to save more money for retirement is that with a Roth IRA, you pay no capital gains or dividend taxes on the money that you make within this account. And the reason why that's so important is the money that you're making in this account cannot be taxed. Unlike an individual brokerage account, which I have, like through Charles Schwab, if I make $1,000 and I record it onto my taxes, then I have to pay the government for me making gains, which kind of sucks. So the one thing with a Roth IRA and with those gains that you are making tax-free, you can't pull out any of those gains until you're 70 and a half. So if you put $1,000 into your Roth IRA and you somehow make $200 in gains, you're not able to pull out those gains until you're 70 and a half. There is one catch to this, which I'll mention later in the video. So Roth IRAs are more aimed towards middle and lower class US citizens. So based off how much money you make, you can only contribute a certain amount to a Roth IRA. So I'll put the numbers over here, but the reason why it's aimed more towards lower or middle class citizens is if you make too much money, you can't contribute any money to a Roth IRA. And if you make above a certain threshold, then they kind of limit how much you can put in. So the current limit for people who make less than 196K, if you're single and not married, the limit you can put in is $6,000. So the limit of $6,000 is for the year of 2020. So out of all 2020, you can only put in $6,000. So you can't go back to 2019 or 2018 and contribute to those years. You're pretty much missed out. But one catch to this is until April 15th, 2020, you can still contribute to the year of 2019. So if you're able to, I really recommend contributing to 2019 because once it hits April 16th, you're not going to be able to contribute to that year any longer. As I stated, the limit that you can do for the year of 2020 is $6,000, but if you're over the age of 50, then you're eligible for the catch-up rate. So instead of you being limited to $6,000, you can put in $7,000 for the year. So $1,000 more than people under 50. The Roth IRA, you essentially treat like a brokerage account, so you're able to buy stocks, index funds, bonds, and whatever else you can really buy on the stock market. But if you don't want to use like a brokerage account, if you want to use it as a rainy day fund or an emergency fund, you're totally able to do that. So let's reiterate some of the pros I went over and a few additional pros that I forgot to mention 5 seconds ago. The money in your Roth IRA are liquid, essentially meaning that you can pull out as much money as you want for any reason without getting a penalty. So since your money in your Roth IRA is already taxed, and you don't pay any capital gains taxes or dividend taxes on it, your money in there is safe from the fluctuating tax rates from the government. So for example, if one year the government is taking 20% of your gains, and then the next year they're taking 25%, you don't have to worry about that because the money in your Roth IRA cannot be touched by the US government. So now that we talked about the pros, let's talk about a few of the cons. So unlike a traditional IRA or a 401k, where you're able to essentially reduce your taxable income and see that immediate change in your paycheck, you don't really see this with a Roth IRA. With a Roth IRA, this money is not taxed, but you don't really notice it until you pull out the money in the long run. Probably the biggest con, and the reason why it's aimed more towards lower and middle class citizens, is because you have a limit. So a few years ago, the limit was $5,500, and for the last 2 years, the limit you can contribute was $6,000. In addition, if you want to pull out the gains out of your Roth IRA and you haven't had your account open for 5 or more years, then you're going to pay a 10% penalty on the money that you do take out. But The biggest exception to this rule is if you're going to be a first-time home buyer, you can pull out up to $10,000 penalty-free in gains from your Roth IRA to go towards the purchase of your first home. So now we get to the part where we talk about some tips. If you're able to contribute the $6,000 this year and for last year, I really do recommend doing that. I'd first put as much money as you can for the 2019 year, which you have till April 15th to do so, 2020. And then after that date, start contributing as much as you can to your 2020 amount. And unless they change the rules, you should be able to do that up to April 15th, 2021 for the 2020 year. So since a Roth IRA is open through a brokerage account, I suggest getting a brokerage that does not charge you for commissions. A commission is a fee for a company to buy a stock for you. So there's two different ways that you can manage your Roth IRA. So the first one is you can do it yourself, which I do. There is target index funds. So if you want to retire by 2050, they have index funds targeted towards that, where they change their assets over time to go from aggressive to more passive as you reach that retirement age that you've selected. And also, if you want to manage it yourself, you can buy whatever stocks you want on there. You can buy Microsoft, Amazon, Google, any company that you can think of. You can buy ETFs, index funds, bonds, etc., etc. But there is also a hands-off approach if you don't want to worry about that stuff with robo-advisors or robo-investors. So for example, Wealthfront, Betterment, and SoFi, they offer robo-investors for you, and they charge something like 0.25%. It's going to vary between brokerages or different companies, so I recommend doing your own research. So that's all I have for you today. If you like the content today, don't forget to like, subscribe, and comment. I release a lot of finance videos, so stay tuned for that. And up here or over here or somewhere, I'll have links to my most recent videos. So make sure to take a look at that too if you want to learn more about other aspects of finance. And yeah, thanks again for watching, everybody, and have a good day.